Hey, welcome to another live broadcasting from Master Investors Company. I want to speak about the velocity of money and how fast we can get to start building cash flowing assets. It's very important to understand that we all have a financial statement. And in that financial statement, we can tell our financial situation. And not just for us, but for every investment or every business that we are thinking of acquiring, we can always see the story of that business by being able to read financial statements. So a financial statement, you'll find that there is an income column, there is an expense column, there is an asset column, and there is a liability column. And the whole game of becoming financially independent and building true wealth is by focusing on our asset column. A lot of people do not have any assets. They never accumulate cash flowing assets. All they know how to do is 90% of the population knows how to work for money. And rule number one of Master Investor Company is that we do not work for money. We make money work hard for us. And we master the ability to read financial statements, to focus on our asset column, and being able to understand if something is an asset or if that is a liability. A lot of people have it backwards, and that is the big issue when it comes to understanding the difference between the wealthy and the poor, and why the wealthy, we keep getting richer and the poor keeps getting poorer. So number one, I want to tell you the 5 steps of the velocity of money. With today's age and the technology, and we live in the information age, we can literally tap into the technology and the information that is available to us very cheap, and it's nearly free, I guess, right? Because we can have just a phone and tap into Google and ask any question, and we'll find the information about whatever we're looking for. So 2 things we need to understand in the information age. It's full of information. That's why it's called the information age, and it's free. We can tap into the answers right away. So let's take advantage of that. So here's the formula. Write it down, the 5 steps of the velocity of money. Number 1, with credit cards, with other people's money, we acquire assets, cash flowing assets, not just any type of assets. A lot of people call it stock an asset, but a stock is not an asset unless it's putting money on your pocket every day, every week, every month, okay? So hoping that the market's gonna go up is not really investing. Investing is a lot more complex, and we need to understand business. That's why we start with a financial statement, you know, how to read them, and we can start with our own financial statement because we all have one, okay? So how many assets do you have? How many liabilities? Plug it all in. How much is your income? Where is your income flowing to? Is it flowing to all your expenses and then out the door and never coming back again? You have to be on the rat race over and over again. So it's important that we understand, number 1, that we must use other people's money. Use credit cards, use private investors' money, whatever it is, friends and families, to acquire cash flowing assets. And it could be an Airbnb home, it could be a real estate, right, that we turn into an Airbnb. So we need to put 20% down. We put it with the credit card. If you have cash under your mattress, then use that to print and go get a credit card so that you can use that credit card to buy and acquire assets. That's number 1. With my money, with our money, we acquire assets. Number 2, recoup our initial capital invested back as soon as possible from the cash flowing asset, because we invested into a cash flowing asset. Number 3, keep control over that asset. So even if we recoup all of our money back, we still have 100% ownership of that asset. And that is literally when we reach infinite return on investment. That's the holy grail. That's when we get all our money that we invested back, meaning the credit card that we use. If we use $1,000, $10,000, or whatever the loan was, we get it all back. We pay that back, and then the asset we still control, and it's still printing money just like the first day. Just like it put money, the initial money back to us, it is continuing printing money day in and day out. So we keep control over the asset. That's number 3. Number 4, move the new money coming in to a new asset. And the loan that we pay back, we'll go get another loan, we expand that loan, and then we get another asset, cash flowing asset. And number 5, repeat the process. And that is the formula for velocity of money. And that's how we'll be able to print money legally without literally using money, our own money. So we use debt. We use mainly debt because we want to tap into debt because it's tax free. Okay, that's how money is created today. So legally, by corporate law, debt cannot be taxed. So that's why the ultra wealthy, we use debt all the time. We're not afraid of having a loan, having a credit card to put into a cash flowing asset. All right, coming to you live. I was doing my walk, and I'm going to be doing this every single day to come out and give you money talk, give you some tips and tools that the ultra wealthy uses every day to become wealthier and wealthier. Right? It's all about building our asset column. Subscribe to the channel. I'll see you on the next video. And stay strong. Remember, focus on the asset column. Learn what is your financial situation right now and start building passive income, because that's the income that's going to get us out of the rat race. It's going to get us into the right side of the cash flow quadrant. New book coming out this month. Stay tuned. Subscribe. A lot more coming in for you, bringing you the good and bad news of money. Subscribe on all platforms. Look for Master Investor. Look for our logo. We're the only authentic brand in the world about money, business, and investing. We're bringing the principles that work in all economies. I'll talk to you on the next video, and stay great. Bye for now. Have a question, leave it below, and give us a like. All right, talk to you soon.